What if I told you that while everyone's arguing about Bitcoin's next price target, the most sophisticated financial transformation in human history is happening in complete silence? We're talking about a $19 trillion infrastructure play that makes every previous financial revolution look like a warm-up act. Today, I'm going to expose the quiet takeover that's reshaping every dollar, euro, and yen on the planet. By the end of this deep dive, you'll understand why BlackRock's Bitcoin ETF was never the main event. It was just the distraction, while they built something infinitely more powerful. Hit that like button if you're ready to see behind the curtain, because once these dots connect, there's absolutely no going back. Think about this for a second. BlackRock manages over $11 trillion in assets. According to regulatory filings I've been tracking, something far more extraordinary was unfolding. The global asset tokenization market exploded from $865 billion in 2024 to a projected $5.254 trillion by 2029. That's a staggering 43.36% compound annual growth rate. Federal Reserve data reveals that traditional SWIFT cross-border payments average 2 to 5 days for settlement, with fees ranging from 1 to 3% of transaction value, while tying up an estimated $1.8 trillion in pre-funded Nostro accounts globally. Meanwhile, blockchain rails settle identical transactions in under 10 seconds, with fees below 0.1%. The efficiency gap isn't just significant, it's revolutionary. The $630 trillion opportunity nobody's talking about. Let me break down some numbers that'll make your portfolio look like lunch money. The global real estate market, $630 trillion. Government bond markets, $150 trillion. Global equities, $111 trillion. Combined, we're looking at nearly $900 trillion in traditional assets. Now picture this conversation I had with a senior executive at one of America's largest pension funds last month. He casually mentioned they're sitting on $200 billion in real estate that basically never trades. We've got Manhattan office buildings that haven't changed hands in 15 years, he said, shaking his head in frustration. Not because there aren't buyers, but because the settlement process takes 6 months and costs millions in legal fees. That conversation lit a fire under me. What if those buildings were tokenized? What if instead of waiting half a year for lawyers to shuffle papers, ownership could transfer in 6 seconds? Industry projections indicate that tokenizing even 10% of global real estate would create a $63 trillion digital asset market. That's literally 3 times bigger than the entire current crypto ecosystem. And we're not talking about speculative digital art here. We're talking about Manhattan penthouses, London office towers, and Tokyo shopping districts becoming as liquid as Tesla stock. Research from McKinsey and Boston Consulting Group shows that tokenized money market and treasury fund assets surged 80% year-to-date in 2025. Totaling $7.4 billion. BlackRock's BUIDL fund alone reached $2.88 billion in assets under management, representing 44% of the entire tokenized treasury market, and growing at a blistering 372.8% rate in 2025. Here's where the math gets absolutely insane. If current growth trajectories continue, conservative estimates project tokenized markets hitting $2 to $4 trillion by 2030. But that's the floor, not the ceiling. Upper-bound forecasts from leading consultancies suggest we could see $18.9 trillion by 2033, a 53% compound annual growth rate that makes Bitcoin's historical performance look pedestrian. Stellar, the silent asset tokenization beast. Now pay close attention to this shocking development. While XRP handles the heavy lifting for institutional settlement, Stellar has become the go-to platform for actually creating tokenized assets. Stellar's Q1 2025 quarterly report reveals mind-blowing numbers: $757 million in real-world asset tokens issued, with $472 million being yield-bearing instruments. The network processed 18.8 billion operations across 471 million transactions with zero downtime for 2,182 consecutive days. Let me repeat that. Over 2,000 days without a single outage. But here's where it gets wild. Stellar's collaboration with MoneyGram has processed nearly $30 million in crypto-to-cash settlements across 170 countries. Transactions clear in under 30 seconds compared to the 2 5-day delays of traditional correspondent banking. The network now hosts over 500 active anchors across more than 50 countries, facilitating fiat on- and off-ramps in USD, UR, NGN, GHS, and dozens of other currencies. Franklin Templeton launched Benji, the first US-registered tokenized money market fund on a public blockchain, using Stellar infrastructure. WisdomTree followed, with unified fiat and crypto payment processing. Circle's USDC achieved over $1.2 billion in cumulative issuance on Stellar, with daily transfer volumes averaging $150 million. The quiet BlackRock empire expansion. This changes everything. BlackRock isn't just launching tokenized products. They're systematically building what industry experts call the iron triangle of tokenized finance. SEC filings confirm BlackRock led a $47 million funding round for Securitize, with Joseph Chalom, BlackRock's global head of strategic ecosystem partnerships, joining Securitize board. This isn't some side investment. This is strategic infrastructure deployment. Securitize controls approximately 70% of the US tokenization market and manages the largest tokenized US Treasury offering at $2.8 billion. Reports from August 2025 revealed BlackRock's strategic collaboration with XDC Network to build real-world asset tokenization infrastructure. XDC is ISO 2022-compliant and integrates with R3 Corda, enabling asset transfers between banks like HSBC and ING. Through partnerships with Securitize and JP Morgan Onyx, BlackRock is embedding this architecture into their systems with zero public fanfare. Here's the bombshell. BlackRock filed for blockchain-based DLT shares under their $150 billion liquidity treasury trust. This digital share class requires a $3 million institutional minimum but imposes no minimum on subsequent trades. They're literally tokenizing their massive treasury operations while nobody's watching. BlackRock's BUIDL fund now operates across 7 blockchain networks: Ethereum, Solana, Avalanche, Polygon, Arbitrum, Optimism, and Aptos, with cross-chain functionality provided by Wormhole's messaging protocol. The fund ranks 6th among dollar-linked digital assets by market capitalization, surpassing major stablecoins and representing nearly triple the size of Franklin Templeton's competing BJ fund. JP Morgan's Stealth. Blockchain domination. What you're about to see will absolutely shock you. JP Morgan's Kinex's platform now settles $2 billion in daily transactions. That's $730 billion annually, flowing through JP Morgan's blockchain infrastructure. The bank launched JPMD, a deposit token on Coinbase's Base blockchain, providing 24/7 settlement capabilities for institutional clients. Unlike stablecoins, deposit tokens represent actual commercial bank deposits and can pay interest to holders. They operate under fractional reserve requirements rather than requiring full one-to-one backing, making them infinitely more scalable. CEO Jamie Dimon's evolution on this topic floored me. This is the same man who once called Bitcoin a fraud, now stating, "We cannot afford to remain uninvolved." Acknowledging JP Morgan's role in moving nearly $10 trillion daily through global payment systems, the bank's tokenization initiatives now extend to carbon credits through partnerships with S&P Global and Eco-Registry, creating tamper-proof audit trails for the $1 trillion voluntary carbon market. By end of 2024, JP Morgan had processed $1.5 trillion in tokenized transactions through Kinexes, a number that dwarfs most countries' entire GDP. Goldman Sachs, the technology kingmaker. Goldman Sachs is positioning itself as the technology backbone of this revolution. The firm plans to spin out its GSDApp tokenization platform as an independent, industry-owned solution within 12 to 18 months. This platform has already facilitated major tokenized bond issuances, including the European Investment Bank's digital bonds and Hong Kong's inaugural tokenized green bond. Goldman collaborated with BNY Mellon to launch the first tokenized money market fund solution in the US, using mirror token technology to represent fund shares on blockchain. Goldman projects total tokenized RWA assets under management could reach $600 billion by 2030, with 10% of global GDP potentially tokenized. Here's what blew my mind. Goldman expects that within 5 years, tokenized securities will represent 10% of global securities issuance volumes, with global securities issuance exceeding $20 trillion annually. We're talking about a $2 trillion tokenized securities market just from new issuance. Regulatory green light revolution. Regulatory and compliance barriers that once seemed insurmountable are dissolving faster than morning mist. Ripple's $125 million SEC settlement in August 2025 definitively established XRP non-security status, removing the largest regulatory roadblock in crypto history. The market response was immediate and dramatic. Institutional trading volume spiked 208% to $12.4 billion. Open interest in XRP derivatives rose 15% to 5.9% to $5.9 billion, and XRP price surged to $3.27. Wells Fargo increased its BlackRock Bitcoin ETF holdings from $26 million to over $160 million, a six-fold increase reflecting explosive institutional confidence. The European Union's Markets in Crypto Assets Regulation, effective December 2024, establishes comprehensive frameworks for crypto asset service providers. Over 40 CAST licenses have been issued across EU member states, creating a fully compliant foundation for institutional tokenization. Germany implemented the Electronic Securities Act, legally permitting companies to issue bonds and funds in tokenized form with full regulatory approval. The $18.9 trillion projection, Boston Consulting Group research projects tokenized real-world assets exploding from $600 billion in 2025 to $18.9 trillion by 2033. McKinsey forecasts tokenized market capitalization reaching $2 to $4 trillion by 2030, while upper bound estimates suggest $30,000 as adoption encompasses diverse asset classes. Private credit tokenization surged 66% over 18 months to $11.8 billion, with Figure Network dominating with $8.8 billion in active home equity loans. Tokenized U.S. Treasuries grew almost 400% in the past year to over $7 billion market cap, with BlackRock's BUIDL representing the largest fund. The global tokenized real estate market is projected to reach $4 trillion by 2035, growing at a compound annual rate of 27%. Deloitte forecasts tokenized debt securities will dominate by hitting $2.39 trillion in value by 2035, while private funds could contribute around $1 trillion. The institutional adoption tsunami. What makes this transformation absolutely insane is the breadth of institutional participation. Harvard University disclosed $117 million in Bitcoin ETF holdings. Institutional assets under custody at major crypto custodians expanded from around $5 billion in late 2023 to over $45 billion by mid-2025, a nine-fold increase. Over 200 active institutional tokenization projects now lock $65 billion in total value on-chain, an 800% increase since 2023. Major investment banks and asset managers project tokenized RWAs expanding from $0.6 trillion in 2025 to $18.9 trillion by 2033, reflecting a sustained 53% compound annual growth rate. Permissioned DeFi pools control $6.4 billion in volume through platforms like Aave, Arc, and Maple Finance. KYC-compliant staking services expanded to $3.1 billion in staked ETH. The infrastructure is no longer experimental, it's operational at institutional scale, the quiet infrastructure lock-in. Here's the uncomfortable truth nobody wants to acknowledge. By the time mainstream media starts covering the tokenization revolution, the infrastructure will already be locked in. The networks will be chosen, the control points will be established, the winners will have won. BlackRock's strategic positioning extends beyond tokenized assets to potential responses to US dollar instability. CEO Larry Fink warned that unchecked federal debt could undermine dollar supremacy, potentially creating massive opportunities for digital assets. BlackRock's Bitcoin accumulation approached 660,842 Bitcoin, with $69.6 billion in assets under management, positioning them to benefit regardless of monetary outcomes. The final revolution. This isn't the next chapter in crypto speculation. It's the first chapter in complete financial digitization. The institutions building this infrastructure aren't waiting for regulatory approval. They're actively shaping regulations while deploying technology at unprecedented scale. When all assets are digital and transactions occur on monitored ledgers, entities managing these systems don't just hold assets, they control economic architecture itself. The tokenization of global finance represents the most significant monetary transformation since the abandonment of the gold standard. By 2030, tokenized markets could represent meaningful percentages of global investable assets, with tens of billions flowing through digital rails daily. The quiet revolution isn't coming. It's here, happening around us in real time, while most people remain completely unaware. First, smash that like button and subscribe, because this channel decodes institutional moves before they become obvious to everyone else. Second, stop chasing speculative plays and start understanding infrastructure deployment. The real wealth creation won't come from meme coin gambling. It'll come from recognizing which networks are being woven into institutional workflows. Share this video with someone who still thinks crypto is just about number-go-up speculation. Because what we've uncovered isn't a crypto story. It's the blueprint for tomorrow's global financial system. By the time this story hits mainstream media, the game will already be over. The winners have already won. The only question is whether you saw it coming.